We're rolling into the mid-afternoon on Wall Street, and it's time for a quick pulse check. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring a little clarity through the chaos of today's markets. The story that just hit the tape, and is shaping the tone right now, is all about the Fed. According to new commentary highlighted by MarketWatch, the argument is that Jerome Powell was right all along. The piece makes the case that by resisting political pressure to slash rates more aggressively, the Fed prevented the economy from overheating and inflation from re-accelerating. Why does that matter to markets in this hour? Because it reinforces the idea that the current rate path is deliberate, consistent, and, crucially, credible. When traders believe the Fed has inflation under control without crushing growth, it supports risk appetite in equities and tight spreads in credit. You're seeing that show up as a modest tailwind for rate-sensitive areas and a bit more confidence in the soft landing narrative. At the same time, that doesn't mean risk is off the table. If Powell's stance is vindicated, it also implies that the bar is higher for rapid cut scenarios. So while the tone of that MarketWatch piece is broadly constructive, professionals are likely reading it as a reminder that policy will stay data-dependent, and that any upside surprise in inflation could still force the Fed to lean tougher again. That's the handle with care angle there. Layered on top of that, we still have this interesting disconnect in the real economy. As Jeffrey Bartash at MarketWatch has been reporting, Americans say the economy feels lousy. Tariffs, higher prices, and slower job growth are weighing on sentiment, but their spending patterns look more like a decent expansion. That tension between what people say and what they actually do with their wallets remains a key macro backdrop into your hand. Supportive for corporate revenues but fragile in terms of confidence if anything else goes wrong. Let's talk about a few under-radar themes traders are watching. First, China and global consumer brands. Reporting from MarketWatch notes that Western names, from Starbucks to Costa to Häagen-Dazs, are learning some hard lessons in China. Domestic rivals are moving faster, consumers are trading down, and international brands are paying the price when they don't adapt. That's the kind of slow burn story that can reshape how investors think about easy international growth and where brand power really translates into pricing power. Second, you've got personal finance angles that speak to the broader investing climate. One new MarketWatch column details an investor being quoted $5,000 by advisors just to handle Roth conversions, and questions whether that actually helps avoid taxes or just opens the door to charlatans. It's not a market mover, but it does reflect an environment where people are searching aggressively for tax and yield advantages after years of volatile inflation and changing rates. We're also still seeing human-side financial stories in the mix. Survivors of large Ponzi schemes, adult children stretched supporting aging parents who live far away. Those remind us that trust, transparency, and liquidity matter, concepts that resonate directly with how people approach advisors, brokerages, and complex products. Into the next hour, I'll be watching a few things. First, any reaction across rate-sensitive sectors and bank stocks as that Powell was right narrative gets digested. Second, whether we see more differentiation in consumer and retail names that are exposed to China as investors think harder about local competition and trading down behavior. And third, just how steady the broader tape remains as we head toward the final stretch of the session, with liquidity thinning and macro narratives hardening into year-end. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,